Good morning, everyone. I'm Martha Stokes. I'm a chartered market technician, which means I specialize in technical analysis, and I'm also a psychotheorist of some reputation. We're going to talk today about voids. It's very important that you understand what actually is happening in the market rather than listening to retail news or chat groups or gurus who want to be famous and actually take advantage of their groups because they inspire them to buy a stock and then they already are in it and they sell it as it goes up. So it's a scam, and the SEC tries to chase after them, but there are about 300 or 400 going on right now. In any of the variable financial markets, there's about 1,000 going on, so it's pretty tough to manage that with the SEC, FINRA, CFTC, and so on and so forth. And you should respect the regulatory entities because they are doing you a service. A lot of people who try to invest or trade or day trade or swing trade or buy a stock they've never bought anything before have no education whatsoever, no idea what's going on. And the SEC's job, FTC's job, and all the others FINRA's job as CFTC is to protect the uninformed investors and the uninformed day traders. You may watch a video or a webinar, get all excited. It looks so easy. Oh man, that just looks so easy. You just buy that stock and it runs up and you sell it. But it isn't easy. It's super, super hard. The SEC has done a study over many, many years and has determined that 99.9% of all day traders who try to day trade and be successful fail. So it's like putting your money in the lottery. If you don't mind losing your money, you don't mind giving it to a professional or a retail guru, then just keep doing what you're doing. If you want to learn and have a consistent profitability, as my students have, then stick with me and I'll give you some information that can really help you, because that's my job here. My job is to help you become consistently successful and have a good career trading stocks. We have Apple up today for no particular reason other than that it has a resistance high, and it was one of the biggest gainers yesterday for the Dow. And it had a spike to the top of its chart, which warns that there will be a minor to intermediate daily correction. It doesn't predict a downtrend. But if we look at this is a very strong resistance level. And what happens is we have a springboard pattern here, a couple of days of nudges by the pros, pops up called the springboard. It's a stair-step trend line pattern. It goes very much like a stair-step, sideways up, sideways up, sideways up. It's one of those patterns that I teach students, and for my beginners, it's very, very reliable so they can consistently get in. It gapped and it ran up, and it ran up very speculatively, but just stopped just before it hit the all-time high. Now, all-time previous highs are very strong resistance because at that point, the price of the stock was over speculated. It was above its fundamental levels. And when a stock goes above its fundamentals, it starts a correction either down or sideways. Apple was actually having trouble, and so quarter over quarter, it also had more trouble. So its fundamental values ended up down here. This is a fundamental level. And that's when the dark pool said, okay, well, let's keep an eye on it. We did support the market for Apple, pushed her back up. She's also got some buybacks in here because Apple is buying back huge quantities of its stock, and it does move price up. And then we have another sideways pattern here, and we're going, perhaps the fundamentals have actually gone up slightly ahead of the earnings third quarter season. So we have that. We have a little correction going on here, which was inevitable because we can see a huge surge of volume. This is odd lot investors, odd lot traders, newbie day traders, all buying the stock because they think it's going to go up, and they buy it intraday. And they're buying the stock, and it runs up in huge volume because there are millions of tiny, small lot, odd lot orders. And it's the quantity of orders, not the size of the orders, that volume tells you is what's going on. So with volume bars, you have to remember it is the quantity of orders, not the lot size. Dark pools never buy into this stuff. They're probably selling to lower inventory. In fact, I know they are because I'm part of the buy side. And they're just lowering some inventory because they say, this is a high resistance. It's pretty strong. And we don't know that this is a strong support level yet. We'll get the reports and we'll talk to the CEO in a few days from Apple and find out what's going on, and then we'll make our further decision. So the information that we get in the next few days is going to tell us what the earnings are going to be like, because it'll be in the charts. Everything's in the charts. Fundamental levels are in the charts. Support the markets in the charts. Buybacks are in the charts. Everything's in the charts. Everything you need to know. You just need to know how to read it. So what happens is we have odd lot investors buying fractional shares, and they have a very low capital base. They have no experience. They're gamblers. They usually like to buy lottery tickets or go to the casinos every weekend, and they splurge their money hoping that some point they'll get rich quick. Unfortunately, just like all of those people who go on to those shows on TV, reality shows, they may make $1 million, but within less than a year, they have lost it all because they don't know how to manage money and they don't know how to control their risk. Professionals always control risk. Risk is the big thing, not the profits. The profits will come if you control risk. Now, the risk here is avoid. Avoid is a term that is used on the professional side. Buy side institutions use it. We have avoid. Avoid means that there is a lack of small lot buyers. There's a void going on here. We have lower volume over a high volume day to lower, and now we have some people taking profits and the very low activity because people are hoping it's going to move up again, and it certainly can. But at some time, it's going to crash and burn because we don't have fundamentals at this level yet. They're not there, not going to hold. That's important for you to know. It's not going to hold. Sure, you can buy into the stock, get some speculation going, but you need to get out before it turns. And this is one of those indicators that I have that is very good and shows a spike that is going on right here. And that is very important to recognize, that the hybrid leading indicators are essential to your success. And this is one that we have for TradingView. We built it for TradingView, and it's accumulation distribution. We can see that there's sometimes when there's distribution going on and sometimes when there's accumulation. Then there was a big small funds management dump, but the dark pools bought back in. And there was another big small funds managers dump, and then dark pools bought back in. So reading and interpreting this is very important. Dark pools create very small volume bars. The smaller the bars, the more likely that the dark pools are in there. The higher the bars are smaller funds managers who don't have any education. They're not really truly professionals, but they want to be professionals. And they have maybe 3 billion or 5 billion assets under management. And they make all kinds of mistakes. They trade just like retail traders. It's really very obvious once you read the charts. So we have a void impending, because at some point, the odd lot investors will run out of their small capital base and they'll have no more money to buy. And then the sell shorters will get in, the sell side institutions, the hedge funds, the HFTs will all set up sell shorts, and they will drop the price they buy to cover with deep into this fundamental zone, but not below it, because they know that the dark pools will surface and start accumulating in here, because this looks like an accumulation pattern. And we have a lot of little low volume days indicating that dark pools had huge lot orders, but only one. That's the distinction you have to understand. High volume bars means many, many orders. It doesn't mean large lots. Voids are going to occur because we have an over-speculated market. It doesn't matter when it happens. You don't have to predict it. You just have to plan and prepare for it and be ready to go when it happens. Now, this correction will either go shift back down and fall into all the nice sideways patterns we had in July, August, and September, or it will go deep into it and the dark pools will come in. And we have many, many big name companies. There are lots and lots and lots of them. NVIDIA and all the rest are in this predicament. They will probably sell off. Everybody will panic. There'll be a big dark black candle or pretty larger than normal. And then all of a sudden, boom, it'll stop. Because Apple has its own buybacks going on, and it's not going to want it to go below this. But this is over speculated. So plan for a void. A void is a lack of small lot orders, because those are the ones that keep the momentum and the velocity and the speculation and the hyperextension going. Once they're gone, they're gone. I'm Martha Stokes, and that's my tutorial for the day.